Welcome to Caching Waves. This is an Elliott Wave update for ICP. I'm going to be going over the smaller time frames, the bullish and bearish scenarios. I would suggest watching the bearish scenarios as well, just because we're not reaching ideal guidelines here. But I'm going to go over the bullish scenario first. Now, a quick recap just on the 4 hour. Have this as a 5-wave move to the upside, wave 1 and 2, from our low at 282.5. Now, simply, if this is a wave 1 and 2 and we're looking for a 5-wave move to the upside, our standard Elliott wave targets for our third wave is the 1.618 extension. I have this on log, as crypto tends to work on log scale on the larger time frames. That third wave target would be at 149.42. As you can see, very high price action. Now, after this wave 1, we look for a 3-wave move to the downside, correcting between the 50 and the 786, most high probability area for a wave 2. We tick through the 618 retracement of the entire 5-wave move to the upside, and this was actually a golden zone trade that I ended up taking a while back. And your entries, the 618, stop at the 66. Now, how this formed out was a double zigzag, W, X is a triangle, Y. Now, after this correction and we start to move to the upside, to get probabilities on our side, we want to see a 5-wave move to the upside. Now, important to note, out on the 4-hour chart, we are breaking this pitchfork, so we want to see some follow through and continuation here to confirm that the low is in. Okay, so we're going to talk about how the low is in, and then after that, I'm going to talk about how we can actually come down for a lower low. So we're going to go down to off this low at 581.6. We want the trend to continue and eventually target that 149. So the only issue we had here was this WXY for our fourth wave made a running flat, where the X wave makes a higher high above the third wave, but is protected by the W wave. Now, it didn't hit ideal guidelines for this fifth wave, but it is a pretty clear impulse in my point of view. Our third wave came to the 1.618 extension of wave 1 off of wave 2, which is our ideal target for that third wave. Our fifth just came up a little bit shy. Now, I will show you how that can fail, in which case this would all be labeled as an ABC. You can see it's a little bit difficult because of all this chop. This can be counted as a diagonal, so 1 2 1 2, or a 1 A B C as a flat pattern. That's why this can be counted as an ABC or a 5-wave pattern. So what do we want to see here? Similar to the previous one, we want to hold the 50 and the 786 for the wave 2. You can see we came very deep, which is why I want to show you the bearish count as well after this. We came up just shy of the 887 retracement, which is still valid. That's the thing to realize. We don't invalidate the impulse till we break below 581.6. Still technically a wave 1 and 2 until that level is broken. Now, for this wave 2, it was pretty hard sell-off. Had a WXY, ABCX, ABC. And then we were looking for recovery from this point. This area is difficult to count as well. I'm going to show you why. Down on the 15-minute. Reason why this is so difficult to count is this area right here. So I'm going with invalidation levels. As you can see, our lowest low was right here within the correction of this move to the upside. And the way I see that would be a WXY, like so, and this would be a diagonal, diagonal. So basically 1 2 1 2 1 2, and we absolutely launch. Now, it's important to note we don't know which is which until we see what targets we end up hitting and how many waves we have up to that target. We won't know till we get a larger correction like wave 2 for our fourth wave, something with similar time and degree, right? So this is up in the air, and how I would count it if this is actually the end of our correction over here, and this is just our 1 2 1 2, is a WXY like so, where this is a flat for our X wave So W, X, Y. As you can see, our Y wave actually makes a lower low to our W wave, so you can consider the completion over here. But you can see it's a very difficult area to trade. We did hit the golden zone of this wave 1 as well, the 618 and the 66. As you can see, that held. So that's a good sign for the bulls on this particular wave. So because of all these tough areas to count right here, I'm relying more on fib levels. So we want our wave 1 in green to end up below the 1-to-1 extension of this blue wave. Something like this, a 1, 2, 1, 2. Because as soon as we hit that 100%, this is more likely an ABC, and we get a move to the downside than a 1, 2, 1, 2. Now, that's just probabilities, but we want to end slightly before that. Ideally, I took the length of wave 1 off of wave 2 for our Fibonacci extensions. We want our third wave to hit around 977. We then get our fourth wave to around 850, and our fifth wave right between 1065 and 1123, this zone right here. And then we'd be looking for another wave 2. I'd like a shy retracement for that wave 2, hold up in these areas as support, perhaps a 382 or even a 236. That's what I want to see, and have us climb back up into this pitchfork I have. And if this is a 1, 2, 1, 2, we should get that move where we absolutely launch. One important thing to note is the wave 1 and 2 in blue. Our ideal targets for the third in blue, which I have much higher, is 1750. But if this is a 1, 2, 1, 2, we need higher extensions. We'd be pulling from this. That's why if this move plays out, I'm not saying it is, but if, I would actually expect a extended third wave in blue, which would actually take our third wave up to the 2.618 extension, up here around 3294, just because of this potential size of this second 1, 2 in green. So you can see how we'd be more likely to get extensions if it plays out this way than stop this third wave at the 1.618 right here. You can see it just doesn't match up. So that's how you can start to see where you might get extensions and come back up into the pitchfork. So that would be a very nice trade. It would take us, what, up until October-ish, something like that. Very nice trade. But this whole thing becomes invalidated as soon as we break this wave 2 low. So that's where you would have your stops, right? Nothing wrong with looking for the setup after this wave 1 and 2 pans out, depending how active you are in your trade. But that would be my absolute stop at 678.6. That would be my absolute stop at current price. Okay, and where would that take us out on the 4 hour? So imagine we get this extended smaller wave 1. As you can see, we're looking for, so this would be our target-ish for a 1, 2, 1, 2, 1, 2, 1, 2. You can see I took the extension of the entire wave. That would be this zone right here. So that would actually be the perfect zone between the 618 and the 1-to-1 extension for a 1, 2, 1, 2, and then launch. Okay, so that's how I see the impulse playing out. Now let's talk about if I am wrong. Now, if I am wrong, our correction is not completed to the downside. I talked about this last video, I believe, and that is this move here can either be 3 or 5. If it's 3 waves complete, this is an ABC, and that was our Y wave. If it's 5 waves, then this is our A wave, we got our B wave looking for a C wave to complete our Y wave. That's the only difference, whether this is 3 or 5 waves. Now, if this is 5 and we're looking for a C wave down, we'd be targeting the 1-to-1 extension where C equals A. That's at 490.07. And the only way I would count this, since this is a 3-wave move, is as a diagonal for our C wave, like so. And then we would look to recover to the upside. That would take us between the 618 and the 786. And that would pull us back into this this pitchfork to the downside. So as you can see, for our wave 2 in this diagonal, we're right in that area where we would expect a pivot. We're between the 50 and the 618. So right around this area is where we would expect a complete collapse. So something to pay attention to. Again, my absolute stop for this scenario is that I'd have to, hang on, let me go back, is at that 678.6. But if this is a 3rd wave, we should hold the 50% all the way up. So what I would do, make your own decisions, this isn't financial advice, is ride like the 50% or the 618 of this move to the upside. If you're well in the profit and you want to protect it, just keep moving it as the wave fills out and hold that 50, right? Because if we do make this 3-4, we expect to hold above the 50 for our 4th wave. So that's how I would protect my profit, because it should just keep continuing on. And as soon as we pass the 618, that's when the probability shift is we're more likely bullish than bearish, which is right there at 885.1. So hopefully we can get through it. But if it does fail, this is what I would expect to play out before an attempt to the upside again. But there you go, guys. There's my bullish and bearish scenarios. Thanks for watching. I'll see you on the next one.